What's up, everybody? Welcome to the Stocks channel. My name is Corey. Today we did see more selling across the board, but the Dow Jones did come in flat. Could we possibly start turning the corner from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today on SPY, we were down about 0.5%, and we did close down here near this support level right around 428. And we did close below that critical resistance breakout level right around 439 yet again. So you can clearly see SPY is struggling to break back above the 200 simple moving average and even breaking back above that trend line that we did break down from. So just like I said last night, we need to wait for a confirmation breakout in either direction. So the breakdown for the bears will be below 428 and the breakout for the bulls will be back above 439 and then back above 442, which is our 200 simple moving average. Anytime you see price action below the 200 simple moving average, you need to be a lot more cautious because it's starting to show you the market is very weak. If this were going to be a strong market, we should see SPY getting back over that 200 simple moving average, and the sooner the better. Once we break back over that level, we'll need to see SPY reclaiming 439 as support, and then eventually getting a bullish breakout back above about 460 and then closing back above 470. So as you can tell, this is clearly a market where the bears have full control, but the bears are running out of time, and if they can't close below support at 428, the bulls are eventually going to turn this corner and make another attempt to try to break out. So there's a lot to be said about momentum in the stock market, and you can clearly see there's a lot of downward momentum. But the longer the bears take to break below the support level at 428, the more that momentum is going to start drying up, which will make it more possible to use that level as a launching pad to start going higher from here. So watch those critical breakout levels for the bull side or the breakdown level for the bears. If the bears can break below 428, you're looking for a retest of 420, and below 420, we're looking for a much weaker stock market that actually could lead to a bear market because you'll have to look at where the triple Qs will be if SPY breaks below 420. Below 420 on SPY, you're looking for strong support at 411. And if we start breaking through these support levels, we're very likely going to start seeing the possibility that 2022 is going to be a bear market. I personally don't think we are going into a bear market, but we'll let the price action do all the talking from here, and we'll know if we do start slicing through some of these critical support levels. So respect the fact that in the short term, it's a downtrend until it's not. So you will want to be cautious in the short term as a trader if you are taking long trades, because there's still the possibility we get that lower high, get rejected from any of these resistance levels I just gave you, and then continue for another leg lower. The most likely resistance level to get rejected from if we can get back above that 200 simple moving average is going to be right around SPY levels of 450. And then above that, we'll be looking for a rejection at either the 50 EMA, which we'll have to see where it's at the time, or the resistance trendline level right around 460. Jumping over to the NASDAQ 100 triple Qs, you can see we are down about 1% today, and it's a very similar story as SPY. The bears are trying to break down through this support level right around 340.8, but as you can tell, that level is holding up as support, and we've now had 4 closes above that level, even though we have seen it being tested. If that level of support does break down, you're looking for a retest of 334, and below 334, we are going to start getting signals that we are going into a bear market. If the triple Qs are going into a bear market, we are very likely going to see the entire stock market in a bear market. I can't think of any scenarios where the triple Qs is going into a prolonged bear market while SPY and the Dow Jones and any other stocks for that matter are ripping higher. So this is going to be a very critical test of support down here, and it does significantly increase the probabilities we're about to see a very strong rally from these levels. So look for a bearish breakdown below 340 and then 334, and then we'll be looking for a prolonged period of weakness in the market, which means we would more than likely go an extended period of time without a bull market, which means we would not see a new all-time high for quite some time. Now, if we start to see a reversal, then we could see the triple Qs breaking back above 353 and then getting back above 360, we should see a retest of that 200 simple moving average right around 365. Your bullish breakout levels will be back above 370, and once we can break back above 370, it's looking a lot more bullish, and then we could see a possibility that we're going back into those 380s to 390 levels. So there's still a ton of resistance to the upside, and you can clearly see we are still in a very strong downtrend in the short term. So in the long term, it's still the possibility this is a macro level bull market, and remember when I say that, we're talking about a bull market that goes all the way back to 2009. So in the big picture, these corrections are usually just blips on the radar if you're thinking long term. However, we have to respect the fact that these short-term trends can turn into long-term trends, so we still need to break down the price action each and every day and make sure we're not seeing anything breaking down from the downside or we need to start seeing confirmation that we're getting bullish breakouts through some of these downtrend resistance levels. So we should know very soon, and more than likely by next week, where we're going from here. We're either going to get that bearish breakdown below 334, or we're going to see the bulls starting to take back over and eventually see that bullish breakout back above 370. On the Dow Jones, we were flat on the day, so we can definitely see there's signs that the selling is starting to evaporate, and we're starting to see flat index in the Dow Jones, which could be a signal that we're starting to turn the corner. You can see here the Dow Jones did not take out the low of yesterday, and we did get an inside candle. So you're starting to see that volatility contracting, which does mean we could be seeing the worst of the selling and better times could be right around the corner. In the Dow Jones, you'll want to watch the support level at 340 and then at 338. And if we break below that, you're looking for a retest down here at 331.6. Your bullish breakout levels will be back above 347, back above 350, and then you're looking for the gap closes at 356 and then 360. Remember that these gaps will get filled. It's not a matter of if, it's just a matter of when. So if you're looking for a reason to think bullishly, you might want to look at the Dow Jones, because those two gaps we do know will get filled, which more than likely means we're not going into a prolonged bear market until we at least see those gaps getting filled in the Dow Jones. It doesn't guarantee anything, so don't just assume we have to go fill those gaps now, but more than likely we will see those gaps getting filled sometime this year. It's just a matter of when and not a matter of if. So watch those critical levels and pay attention to any signs of strength in any of the indices, because usually you'll see one index start leading the way higher or lower, and then the rest will follow suit. In the Russell 2000, we were down 2.27% today, and we did see a bearish breakdown in the price action, with the second day in a row of the Russell 2000 closing below 196, and we are testing that support level at 191. Remember that I told you 191 is that very strong support level that has to hold up, or we're more than likely going to see the small caps going all the way down to 170 and possibly even lower. So watch this level at 191 very closely, and we need to get a bullish breakout back above 205 to snap this downtrend. Back above 205, we'll be looking for a retest of resistance at 212, and then a test of the 50 EMA, which is right around 215, and then another bullish breakout level will be back above 220. Once we can get back above 220, we'll be seeing a lot more bullish momentum, and then we could think about going up there to fill that gap just above 228 with resistance on the way at 226. This is clearly a very strong downtrend, so don't just assume we have to go higher from here. So if we do break down below 191, you'll be looking for more downside all the way down to about 170. On the Arkk ETF, we were down 3.91% today, and we did close just below 66.8, which does mean we could either come down here to retest this low right around 65 or go for the next leg lower just above $60. Your bullish breakout levels will be back above 75 and then back above 85, and then confirmation that we could be breaking the bear market will be a close back above 91. This is clearly a very strong bear market, so there's still a very high chance that we are going down to $60. And as I told you, that $70 level was a strong support, so the fact that we're closing 2 days below it is not going to be a bullish indication. So continue to expect more downside in this ETF until the price action can confirm a bullish breakout. On the VIX, we were down 4.6% today, with the VIX closing just above 30. We clearly see the VIX is in a bull trend, and we clearly see the VIX is looking very impulsive, so this is definitely something you won't want to ignore. As long as the VIX is above 24, be very cautious, and it does increase the chances we are going into a bear market the longer the VIX is staying above 30. If at any point the VIX starts breaking down below 24, that will be a bullish indication, with the confirmation we're going back on the bull when the VIX closes below 20. So watch those levels and remain cautious as long as the VIX is trading above 24. On Bitcoin, we're currently down about 2%, and we see Bitcoin is still struggling to break and close above that negatively sloping 5 EMA, and we're still in a very strong bear trend. At this point, you can clearly see that Bitcoin does want to come down here to test this support level, which is just above 31,000. If we break below that, we still have support at 30,000, but if we break below 30,000, we'll likely see Bitcoin starting to trend down towards 20,000. Your bullish breakout levels will be back above 41,000 and then back above 46,000, and I don't suggest getting bullish on Bitcoin until you can see a price action bullish breakout, which means you need to see Bitcoin at least above 41,000 before you think about getting bullish. Otherwise, we're more than likely going to see Bitcoin at 30,000 and possibly even $20,000 this year. On NVDA stock, we were down 3.64% today, and we did get a bearish breakdown with the price action closing below the 200 simple moving average, and that level of support is right around 221. So NVIDIA is clearly developing a lot of bearish momentum, and we clearly have the bear trend, so there's no reason to get bullish until we can see a bullish breakout. Your next support level to pay attention to is 209, and then you're looking for support at 197. Below 197, we're going a lot lower, and it's going to be a prolonged bear market, so that will be your line in the sand on NVIDIA stock to prevent a further bear market in this stock. We're below the 200 simple moving average, so the bear scenario is becoming very real, and you really can't see a bullish breakout until we start getting back above 253 and then start breaking back above about 280. Resistance levels on the way there will be right around 262 and 271, so watch those levels closely. On Tesla, we could see the price action getting absolutely routed today, going down over 11% and closing at 829, so that does mean we close the gap at 843. We're breaking down through the gap level of support and also the support trend line, which was right around 835. The next support level to pay attention to will be the 200 simple moving average, and that level is just above 813. If that level breaks down, you have the support trend line at 795. And if we see price action breaking through these support levels, we will see Tesla going into a bear market. You can get bullish when Tesla can break back above about 960 and then back above 1000. Otherwise, expect more downside until we can see a confirmation of the bullish breakout. You could try to play long off of any of these support levels, but if we break out of the channel below 795, you will want to get a lot more cautious for downside because we could see Tesla going much lower from here. On Apple stock, we were down 0.29% today, closing just above the 100-day simple moving average, which is just above our support level at 157. Remember, this does meet the criteria for a full-blown correction in Apple stock, so there's no guarantee we have to go any lower. If we break below 157, there will be strong support at 153, and below 153, you're looking for a retest of the 200 simple moving average at 148. If at any point we see Apple stock breaking back above 167 and then back above 168, it will be looking a lot more bullish, and you'll also have resistance right around 170 to 172. So watch for the bearish breakdown below 157 and 153 and the bullish breakout above 167 and 168. On the financial sector, we were down 0.91% today, and we are holding above that 200 simple day moving average, and we still have a gap to fill at $41. The industrial sector was down 0.89% today, and we can clearly see the industrials are looking very weak, but so far we haven't taken out the low. The healthcare sector was up 0.26% today, and we can see we are starting to put in somewhat of a bottom down here. So if we can get a confirmation breakout back above the 200 simple moving average, we could start to develop some bullish momentum. The energy sector was up over 1% today, and we continue to see a bullish energy sector in both the price action and the trend, so there's no reason to believe the energy sector is done going higher yet. So jumping back over the S&P 500, this is clearly a very strong downtrend and a very strong elevator down market, and this is starting to be an historic event with how fast we're seeing this decline in January. So just protect yourself and be cautious and understand that nothing goes down in a straight line forever, and there's always going to be a counter trend rally. So you can clearly see momentum drying up as bears are failing to break down below this support level. So use that support level to indicate if we could see a reversal from here. And if that level breaks down, you're looking for an acceleration of more selling to the downside. Take it day by day and make sure you're using proper risk management and that you have a trading plan and that you're sticking with it. Keep in mind that this is completely normal and to be expected, and all stock markets always have a correction, and there's always the possibility that correction could lead to a bear market. The last 2 years are not typical, and we really went the whole entire last year without a proper 10% correction in SPY, so there's really no surprise to see 2022 starting out this way. Remember that when corrections finally do come to an end, you're looking for a continuation of the macro level trend, and the trend is still bullish. If this were a correction in a bear market, it would be a completely different story, but this is a correction in a macro level bull market, so you don't want to get overly bearish now that we've had the full-blown correction. Remember, SPY is down over 12% and the triple Qs are down over 18%, so that does classify as a full-blown correction. So you really don't want to just assume you're going to get a bear market. You want to wait for the price action to confirm it, and we clearly have those lines in the sand that we have defined, and we'll know exactly that we're going into a bear market if we see price action breaking down through those levels. So just take it day by day and stick to your plan, and you'll be absolutely fine. And these dips and these corrections present great buying opportunities. So if you still have cash on the sideline, make sure you have a solid plan of exactly where you plan to scale in, and make sure if you're a trader, you're protecting yourself in both directions, because with volatility this high, there are going to be volatile swings in both directions, which you can clearly see by how large these daily candles are. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Bank Trade Alerts beats the market every year and never has a negative year, and even if the market goes into a bear market from here, Bank Trade Alerts is going to do very well. As you can see, in 2008, Bank Trade Alerts beat the market, making over 90%. If you're interested in joining Bank Trade Alerts or finding out more information, you can find out all of the details by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.